The following program is made possible in part by the Dayton Bar Association.
Good evening and welcome to You and the Law. I'm Mike Monta, your producer and host for tonight's program. You and the Law is the show that brings the finest legal minds in the Dayton-Montgomery County area together to discuss the most compelling topics of legal interest. And tonight, with April 15th deadline looming, our topic is going to be taxes, income, estate, and otherwise. Joining me as a expert guest, and he is an expert, he's been on, how many years has it been? At least a dozen here, is Mr. Chris Cowan, an attorney whose office is on Monument Avenue at the firm of Cowan and Hilgeman. So we're going to discuss some tax information tonight, and before we get to our first question for Chris, or discussion, let me remind you that You and the Law is a monthly presentation produced here at the studios of the Dayton Access Television, and we're sponsored by the Dayton Bar Association, which has been in effect since 1883. I think Queen Victoria was still around then. Not here, not in Dayton, but DATV is the public access channel of Time Warner cable network here in Dayton, and the program is also cablecast north and south on Channel 6 on the Continental Cable Network. We still on Continental Cable? I don't know if we are or not. Nobody said that we weren't, so we'll go with that. And that's through the auspices of the Miami Valley Cable Council. The executive producer for the show is the originator of the show, former Judge Mike Brigner. Now, we are a live call-in show, so if you have any tax questions, and there we are. There's our banner saying 223-5311. If you're from out of the area, 937 is our code, our area code. And we also stream live on datv.org. So if you're not seeing us live on TV, you're seeing us streaming, and we hope that that is a good experience with the streaming. So I'm going to turn to Chris Cowan at this point and have him introduce himself and tell you, the viewing audience, a bit about his background and familiarity with tonight's topic. Welcome again, Chris Cowan. How are you?
Mike, it's my pleasure to be here. Great to see you. Good to be on the show. By way of background, I started in the accounting biz, Mike, in the 70s, and did that for a while, which I thoroughly enjoyed, by the way. And then something happened. I wanted to go to law school, so I went to UD and got out in 81. And since 81, I've been in town here doing a wide variety of business, tax, planning, income, death tax, and the issues that come up with those areas for individuals and some businesses also. And so since 81, that's what I've been doing on a full-time basis.
Thanks. Great to have you here. We're going to talk about every topic that our viewers want to call in with, assuming that they call in. Our number is 223-5311. But there's a lot of hot topics that you and I have been talking about prior to the show, and you have some opinions on those things. And we might as well start out with same-sex marriage. How does that impact taxes? I'm thinking it's probably some estate and income tax treatment.
It's actually a combo of both, and Mike, you may know, but some of our viewers may not know, the case that actually went to the Supreme Court that brought the issue to the court about whether they were going to decide on same-sex marriage was actually a death tax case. It was a sort of an unusual case. A couple of ladies got married in Canada a number of years ago. They moved to New York.
Which was perfectly legal at that.
My understanding was totally a legal deal. They go up to Canada, they get married, easy peasy. They ended up in New York State. One of these ladies died, and there was a fairly significant amount of money as part of her estate. And the attorneys who did the legal work for that decedent did not take a marital deduction, filed the tax return, then they filed for a refund and said that that there should be a deduction for people who were legally married in Canada, and what's going on here. And so that case eventually made it to the U.S. Supreme Court. So it was a death tax case, an unusual case.
The IRS didn't think that they were spouses then, right?
Actually, the IRS, my understanding of the case, the IRS administration was ordered not to defend the case. And that I believe taxpayers formed a political action committee actually to fund up the litigation. But what happened was, the long and short is, the Supreme Court weighed in and said in a death tax case that people of the same sex could marry and get protections as a married couple. So that brings us to Ohio, because Ohio's Constitution says otherwise. So Ohio is in a little bit of a flat-footed, we're flat-footed right now, because we have clearly people can file in the U.S. same-sex married filing jointly, no problem. You file your IRS tax return, whether you're living in Colorado, Ohio, Michigan, wherever. But Ohio says, because of our Constitution, which hasn't been changed, you cannot file married filing jointly in Ohio. You have to take the married jointly return and break it apart. And the
You're talking about the Ohio income tax.
Ohio income tax. The federal would be filed jointly. For example, if you and I were married.
Right.
If we were married, no problem. I happen to be married, and I know you're married, so we'd have to do
Yes.
some things to get there.
Right.
But if we got married, we could file jointly. Me and you, IRS, no problem. We'd get a joint return, and we could use joint tax rate, joint break, all those things. But when we came to Ohio, you'd have to file a separate schedule and file basically separately, and I would file off my joint return in Ohio, I'd file separately. And the odd thing is, because of that, we would actually get more money back from Ohio and pay less taxes, because the tax brackets are lower for two single people than they are for married people in Ohio. So it's a long story to get the answer to you. But
So we don't want to change things.
well, people still, there are some people who are unhappy with the fact that Ohio is not recognizing the status of same-sex marriage. So there is a tax break for doing it the way the Ohio wishes it be done.
So that's the twist there,
That's
that
the
you'd
twist.
think that people would want to be able to file their joint marital return so they could get more money back, but it turns out it's the other way around.
Yeah, it's a little bit of a comedy thing, but people are still unhappy that they can't file Ohio jointly, like they're filing federal joint.
Now, would that work the same way with opposite sex couples who file jointly federally, and could they file in Ohio separately and get more money back?
I'm saying Ohio forces you to do that. That's what
Oh,
Ohio,
okay.
that's what Ohio forces you to do. They
Okay.
will not let you file jointly. They make you file separately.
But I mean a regular marriage. Will they?
A regular marriage, then yeah, but then you have to file the federal return.
You have to do the same.
You have to do the
On
same.
both. Okay. Well, that's
You have to
no
do the
good.
same. Yeah, that's no good. Exactly.
Okay. So there's the advantage
there's
to
the
the
advantage.
same-sex marriage.
Yeah.
Okay. So
Which is a little odd, but that's
Does
what's
seem odd.
It's odd, but that's what's
yeah, it
happening.
seems real odd. Are there any other things in the same-sex area which the tax gets into at this point?
Well, you know, there have been years where it's been a little more confusing, but with the Supreme Court decision, I think that's a settled area now.
Yeah, it's clarified.
It's clarified. If you're married and you have a legal marriage in the states that are permitting this, obviously, you have a marriage, you can file separately or jointly. And so and also go back and amend. You can go back and amend these returns. The 12-year is still open, so you can amend tax returns if you were at that time married, and there's possibly some refunds available. You'd have to look at sort of each situation and run the numbers to see whether it's better to go back and amend or whether it's not worth it.
Is there a look-back time that you can't go past to amend?
3 years.
3 years.
3 years.
Okay,
So
so
the
if you
12
find something from 10 years ago, you're out of luck.
You're out of luck. And that is not an unusual situation. Many times people, for illness or divorce or something happens with them and they get out of whack and they don't file their tax returns. IRS has a special little rule that if you don't file in 3 years and you are due a refund, that refund the government gets to keep. But if I may, just for a second.
Yeah.
But if you owed taxes 4 years back or 5 years back, you get to pay.
Well, that's what I was going to ask you. They can go back more than 3 years.
They can go back, that's correct.
How many
Well,
years back?
that gets into what the law says and what's practical. The IRS says if you haven't filed, you should file.
Right.
But there have been some situations where they'll sort of say 10 years or so might be enough. But the rule is that if you haven't filed, you're supposed to file.
Okay. I know you don't want to talk about any necessarily political things, but this is an election year, and there's lots of promises out there of what's going to happen with taxes if so-and-so gets elected, and mainly amongst the many people when they say when they are elected and are in the White House. One candidate says there won't be any IRS.
No IRS?
Yeah.
I might vote for that person.
And that person says that you can send a flat tax. You send your return in on a postcard or something.
Yeah. I'm for all that.
You are?
Yeah. I'm for all that. I'm for a flat tax. I'm for a sales tax. I'm for a value-added tax. I'm for a consumption tax.
Okay.
I would like to see the IRS abolished and we move to some sort of a...
So you're a cruise man then?
I don't know who the politicians are. I'm pretty apolitical.
Yeah.
But the IRS is busted. The system doesn't work. It's extraordinarily inefficient. We have an enormous non-compliance problem. We have a huge underground economy. And all those things would be picked up with any sort of a sales tax, value-added tax. Walmart knows how to collect sales tax.
Okay, so
Sears knows how to collect sales tax.
You're saying
Wendy's knows how to collect sales tax.
the tax should be on consumption, not income.
Absolutely. And then we don't have to worry about it. All these people are it's already in place. It's already in place. We can get rid of all the bureaucracy. There's an enormous infrastructure that's totally non-productive.
Well, every state has a sales, well, maybe they don't. Most of the states have a sales tax. Of course, Ohio does.
There could be a couple that don't, but they're already equipped to collect sales tax.
Okay. Real estate taxes too? Stay in place?
Well, it would depend. It would
Of course,
be.
that wouldn't be a federal thing.
Yeah, that's a local tax.
Right.
So the IRS really has no business
Okay.
horsing around what Kettering has for a real estate tax.
Okay.
So I'm talking on a national level
So you're thinking...
to replace the income tax, because the real estate tax doesn't go into the federal treasury. So I'm talking about what would be the missing money from the IRS collections. That's correct.
Well, if everything was abolished, how does the government make money then?
When you would go to Dorothy Lane and buy your killer brownie, you would have a 7 or 8% federal
Okay,
sales
so
tax.
you're saying replacement rather than abolishing everything.
I would be okay with some sort of nobody knows exactly the numbers. Nobody knows what sort of revenue would be generated by any sort of a consumption use or sales tax. So it might need to be...
Okay, somebody's got to tweak the...
it might be phased in where maybe you start out at some very modest amount, maybe 2 or 3% or something, and then you would see how the revenues would adjust up. It would take some work because it's a total... it would be a total work in progress.
Do you think that possibly that could inspire deflation, since maybe people wouldn't want to spend as much, so they wouldn't have to pay as much taxes? I've heard that argued before.
I don't know about that, but I think the revenue generated would be so staggering that we would be reducing the income tax very quickly.
Okay. I guess everybody needs milk, toilet paper, and bread.
Yeah, we could have,
right?
obviously there could be some exemptions, medicines, doctor care,
Right. Okay.
legal fees.
Yeah.
They should be exempt.
Okay. Well, it's not too late for you to run for office.
Yeah,
and
right.
Maybe,
these are
push
just
this.
based on my observations of what I've seen in 30 years.
This is more compelling than the debates I've been watching recently.
Well,
to me, it is.
Yeah, to me it's such a no-brainer.
Nobody's calling to tell you how compelling it is.
But the problem with the tax code is the politicians like the tax code because there's all sorts of goodies in there for people that are looking for goodies.
Yeah.
Everybody's looking for a goodie, whereas in the sales tax consumption arena, they would be negated.
Okay. Let's talk about something else. Everybody's favorite subject, Obamacare. How does that affect taxes, and is there a tax on it? And
I've only had a couple of sort of negatives on the Obamacare, Mike. Unfortunately, I had a couple people last year who lost their insurance coverage, and there were some foot faults where they did not get coverage, so they were not insured. They had some insurance for part of the year, but there was a piece of the year where they are not covered. That's not good because the IRS now becomes a collector of if you call it a surcharge, a use, a fine, a penalty, whatever you want to call it.
The opponents call it a tax.
Call it a tax.
Yeah.
It's collected by the IRS, but there's a form you fill out.
Okay.
And this year the penalties are going to be a little higher, and so hopefully everybody's getting insurance coverage because otherwise you're going to, based on your income level, you're going to have a little additional tax.
Okay, so there's lots of what they call exchanges, I guess, to get that. So you're probably suggesting that folks find one of those somewhere.
I would really suggest it. Obviously, you'd have a health problem and have an enormous out-of-pocket, but you also save some dollars to the IRS too by having health coverage.
Okay. Death taxes. It's not income tax, but it's income for the government who gets it. What are they, and who's got them? And we're in Ohio, and also in the United States. So you told me before there's good news.
There's great news. This is a great time to die in Ohio.
Okay.
Awesome time to die because in 2013 the Ohio legislature abolished the Ohio death tax.
Okay.
And roughly, there's different permeations, but for a single person, Mike, anything over 300,000, rough number, was taxed at 7%. So there's plenty of people.
Take a little chunk out of your estate.
I mean, say somebody has 600,000, single, 600 minus 3 is 3, is $21,000 would go to Columbus. So it doesn't matter if you're Billy Gates or Warren Buffett. And think about it, somebody of that kind of economic wealth coming to Ohio would have to pay no state death tax. It is really phenomenal, and that doesn't. There's no ceiling, no cap. And for example, I just had an estate where a fellow had a farm in Pennsylvania, just across the border, and there is no exemption in Pennsylvania, for example, for a gift from a dad to children. No exemption. So the first dollar gets taxed at a handful of percent. The rate is low, but there's tax all the way up, no cap, no ceiling, and that's totally not a taxable event in Ohio. So that is very, very...
now what inspired our, I was going to say, our state government to do that, and how do they make up? That was kind of a good revenue maker for 100 years or more, wasn't it?
I am not an expert on state budget, but my understanding is Ohio has been recovering since '09, number one. Number two, the oil and gas industry has been good to Ohio.
Discovered oil somewhere.
There's no doubt about it. The Marcellus and Utica oil operations in southeastern Ohio has generated a lot of additional income and revenue. And I think there's a sense, we've had people retire out of Ohio because Texas, Florida, other states do not have death tax. And so there's really a thought that maybe people will stay in
You're
Ohio.
going to move back to Ohio?
Or stay in Ohio.
Yeah.
I've actually seen that. I've seen that. In fact, a fellow I was with this morning was basically talking that way. And so keeping capital, keeping brain power, keeping resources. So there's a thought that different revenue streams and different economic events will keep people in Ohio, and it'll be good for Ohio. It's a pro-business thing, it's a pro-economy thing, it's a pro-taxpayer thing. It makes Ohio look a little more friendlier. So
We're a friendly state.
it's a friendly state, and it's now more tax-friendly too, especially if you compare something like Pennsylvania, where every dollar gets taxed.
Yeah, that's no good.
That's a significant difference. So
Better to live in Steubenville
than Pittsburgh.
right.
Yeah.
Yes.
Yeah.
The IRS, what's the deal with them?
If you would have said to me, Chris, in 1984 or 5, that we would have in 2015 no Ohio death tax, and the federal exemption now for a single person is north of $5 million. For this year, it's $5.45 million, almost $5.5 million. I would have bet everything I had that was never going to happen. It's really
it was down under $1 million then, wasn't it?
it was like 600,000 in the 80s. So we were drafting AB trust and tax shelter trust and marital trusts and setting up irrevocable life insurance policies and doing all sorts of planning because the exemption, as you say, was 600, 700, $1 million. And now, poof, we got an exemption that's $5 million. And not only that, but we never had portability until 2011 on the IRS level.
Tell us what portability is.
You're married and you might have some assets, your wife might have some assets. She may die and she's under $5 million. Let's say she's at $1 million. You can take her unused $4 million, $5 million minus 1 is 4, and take that with an election and file some tax returns, notices to the IRS, and you can take her 4 and port it or transfer it to you as a surviving spouse. So you have your 5 and your wife's 4, $9 million. $9 million is a significant difference than being a single person and being sort of capped out at $1 million under the old rules. So there are literally thousands, and I'm sure more than thousands of people in our metropolitan area with the raising of the death tax exclusion and the ability to put husband and wives together for adding up the exclusion.
Good to stay married then, more?
It's good to stay married. And
for that reason anyway.
Yeah, definitely.
I'll have you back for the divorce show and we'll see
see how it works.
See if it matters.
But it is phenomenal taxpayer relief. It's just literally tens and hundreds of thousands of dollars that's going to remain with taxpayers. And
can we predict whether things will stay as they are, or?
We only have 7 people running for the presidency.
Yeah,
I can tell you this, I believe Mrs. Clinton would like it to go down to 3.5, and I've read all different stuff, but I think Mr. Trump would like to abolish it. So that'll sort of give you a range of what the options are. You know, it has to go through Congress, has to be negotiated out. People are very comfortable with the $5 million, I can tell you that. Yeah. And when you talk to people, husband and wives, about the concept that you don't have to have sophisticated planning documents.
I was going to ask you about that. What does this do to the tax planning lawyers of the world?
It makes it so much easier and a happy.
Or does it put them out of work, or they have to?
You don't have to have any estate plan with your wife, really, as long as she's comfortable with her property passing you and have a sweetheart special will, and your property's passing to her, and you're on the same page as far as what to do for second death situations. You don't need any of these sophisticated planning documents. You can make a portability election and do it later. You can do it 5, 10, 20 years later, because you can't even do it until the first spouse dies.
Yeah.
So it is, in the right fact pattern, it is really, really a good deal.
Let me interrupt you here. We've been going for about half an hour to let the viewing audience know that you are watching You and the Law. Our number here is 223-5311. This is an audience participation show, and Chris could probably go on for the next 2 hours without any questions because he knows so much and he's telling us so much. But we would like to hear from you and call in and voice your thoughts and opinions. We do not have this isn't a commercial TV. As you know, we are sponsored by the Dayton Bar Association. I'm going to tell you a little bit about them. This will substitute for a commercial. The Dayton Bar Association, whose executive director is Bill Wheeler, isn't it? And Bill's been around for a dozen years, give or take, and doing a great job. We have got a variety of community services for the benefit of Miami Valley citizens. And they are a lawyer referral service. If you don't have a lawyer and you have a legal problem, that's a good place to call. The number is 222-6102, or the main number is 7902. Either one will get you where you need to go. There's a notary public service with applications and testing. If you need to be a notary, you can't just go down and get your stamp, I guess, but you do have to take a test, and if you pass, then you are a notary, and you can notarize car titles and deeds and things like that, statements made by your neighbors. Very important program we have is Wills for Heroes, and that is where volunteer members of our association create wills for emergency first responders, firefighters, police and EMTs, your basic hero type of folks. There's lots of heroes, but they really are. They've got their life on the line day in and day out. Call the Bar Association. If you don't have a will, you fall into that category, go and do it. It's not a complex thing, it's not estate planning, but a simple will take care of you and your family for a good long time. We sponsor public service projects, volunteer lawyers projects serving the disadvantaged, founded and supported by members of the Dayton Bar. Getting out of breath just talking about this. Our website is www.daybar.org, and we are very happy to have them since 1983 sponsoring our members and community activity. What is 1883? That'd be 133 years, wouldn't it?
It's a long time.
Pretty long time.
Long time.
And still going, and a lot of good people involved. Well, let's get back to the program. We're talking tonight on You and the Law about taxes, income and otherwise. We have as our expert guest on the very knowledgeable Chris Cowan, who's devoting some of his time, valuable time, to be here with us. And if you have a question about taxes, you should call. A number will pop up here in just a second. There it is, 223-5311, and our operators will put you through to us and to Chris. So let's talk about another thing which has become very popular illegally in the past 10 years, and that's tax frauds, ID theft, phishing with a PH, P-H-I-S-H-I-N-G, and that's become a problem, hasn't it? And it's a problem for each and every person who has a phone or an internet or anything like that, right?
Those are big problems, Mike, and I'm here to tell you that personally, I've had people call me at my office and tell me that I owe the IRS money and that I need to tell them a credit card number right away, or that I will be arrested and I will go to jail. And that has happened to me personally at my office at least twice.
Now, why would they call the office of a lawyer? Or is it just random robocalls, you think?
I can only guess it's some sort of a random call.
I mean, they get an administrative assistant and they put them through to you, or do you just happen to answer their call?
The call came into me,
Okay.
and so I get the call, and that's the answer. And so I tell them, Mike, when I get that call, that there's absolutely no problem. They can come right down to my office. Here I am, down a Monument. I'm sitting right here. They can come right down for the check.
Uh-huh.
Click. But I can also tell you, and
That works, I guess.
it works. But I'm ready for those calls. But I can tell you that my wife has gotten the exact same phone call at home.
And she wasn't ready.
And she was not ready, and she did not like that. She actually called the police. I never called the police or anything, but my wife did. When she got a phone call of the same nature.
You have caller ID?
Does she have caller ID in that phone? I think she
That'd be
does,
helpful,
but
wouldn't
I don't think that number showed up as an ID.
Okay.
And so, but she answers the phone.
Sure.
So I mean, but that was unsettling to her. I could certainly understand that. And my understanding is literally hundreds of millions of dollars have been attained in that sort of manner. So
Well,
I can tell you a couple things. First of all, a couple things. IRS will never call you up and tell you you're going to jail.
They don't call you up at all, do they?
They
That's-
could.
I
It's
think
possible. It's possible to make a phone call,
Okay.
but the IRS is not going to tell you to go to jail. Now, if you're in an IRS special examiner's office and you've been read your rights by the criminal section, it's possible you might go to jail.
Right.
But no IRS guy is going to call you up and say you're going to jail.
Not
Number two,
cold. Not
not
cold.
like that. And you're never going to get a phone call on a bill unless you got a bill. Right? It's possible there could be some discussion, but you're going to get a notice. You're also going to be advised you have the right to appeal this. If IRS sends you a notice saying that they've done something with a tax return and you owe them $150, they're going to tell you also have a chance to appeal this determination. So you're going to get a bill, you're going to get a notice. You're never going to get a threat to go to jail.
Send them your figures.
And you're never going to be asked for a credit card number. The IRS agent isn't going to say to you, please give me your American Express number.
Right.
That's not going to happen. So if any of those things happen to you, if you're threatened to go to jail, if you are not given an appeal right, if you did not get a bill, you should never be asked for a credit card. Those things are all red light signals that something is funny. Never give anybody over the telephone a creded card number.
Well, I'm assuming your wife is a person of some sophistication and knowledge, and if that's bothering her, folks that maybe aren't as sophisticated with these type of things may be more susceptible to sending money or money orders or things like that.
That's why I think that's why hundreds of millions of dollars. I think a normal person who has somebody in a very demanding and authoritative tone saying you're going to jail, and I'm from the IRS, I don't know whether the number is 5% of 100 or I don't know what the number is, but obviously people are nervous, people get scared, people do things they shouldn't do, and next thing you know, some of their money has gone to somebody other than the IRS.
Where typically would they ask you to send the money? Let's assume they convince the.
Well, they'd get a credit card number.
Okay.
Or they'd get
And just use
a prepaid debit card.
Okay.
Right. They'd say, okay, well, give me your okay. If you, I never went down the whole line, but I'm
Right.
sure it gets to something like, gee whiz, if you give us your credit card number,
right.
you don't have to go to jail
Right,
today.
right.
So that's where you are. And the next thing you know, we
So
have a
they're not
credit
looking
charge.
for cash.
I mean, to get cash, they'd have to come to see you.
Or you
or you
have to
mail
send it somewhere.
You have to mail it somewhere. Yeah.
Right. Okay.
I'm sure there's all sorts of different spins off this, but
Right.
the ones I have personal experience are just related to you, and eventually, it was just more of a nuisance call. That's one thing that's happened. Now, I've also had, and this is more prickly, I've had people suffer ID theft.
Okay.
And I can give you the most recent example of that. A fellow files his tax return. It's a very, very simple tax return, and he's due a refund of, let's say, $15,000.
Mm-hmm.
He files a tax return, and wouldn't you know it, somehow somebody filed a tax return using his Social Security number
Already.
and got his refund.
Okay.
Okay, so we contact the IRS. Nobody locally handles that. There's a fraud section in San Jose. Send all the paperwork to San Jose. Months and months and months and months go by. And wouldn't you know it, in this particular case, my client made a math error.
Okay.
Made a math error, and the IRS wanted a handful of hundreds of dollars. And then they say, this number will be locked in stone unless you go to the tax court. $500 or so to go to the tax court is sort of like dropping a nuclear bomb on an ant, but that's what we did.
Yeah.
I filed a tax court petition in Cincinnati, and then it actually worked out, truthfully, because all of a sudden I could talk to somebody in the attorney's office that's handling tax court cases, and they get on the computer and they confirm, yes, somebody filed a tax return, and yes, somebody got this guy's refund, and yes, they got my paperwork, and no problem, we'll sort it out. But that's a fair amount of legal work.
Yeah.
We've been horsing around with this
Right.
for way over a year and a half. And so this is a problem because it's difficult for IRS to sort this out. Obviously, IRS is not in a great...
Well, they've goofed in
I
some
underst-
way, right?
I understand they gave the wrong person the wrong money, so that means that they're basically going to have to go out of pocket
Right.
for my guy to be made whole. They have no way of tracing the money, apparently. And so this is a problem, but it's a real hassle if you're thinking you're going to be getting a refund and you have to hire an attorney to end up in tax court to end up getting your refund.
Are there more instances of this ID theft in this area because of electronic filing, do you think? It didn't seem like when the old paper returns went back there was that much of it. Maybe I don't know what I'm talking about,
Yeah,
but it seems like there's more now.
I don't disagree with that. I think what's happening is people are able to get through illegal activities maybe a whole list of names and Social Security numbers. I don't know how they do this, but somehow or other they're linking in names and socials, and they're able to file documents. Actually, I believe under the new IRS regulations, I have not done this yet because it's just more legal work. I believe I can go back and get a copy from the IRS now of the return that was filed illegally.
Okay.
Okay, I think there's a small service charge or something. I haven't done that. So
Well, you'd
have
think that they would just, you'd say, well, I didn't file it and I don't have it, send it to me?
No.
Can't do that.
They weren't disclosing those until just recently,
Okay.
where IRS will disclose the fraudulent return to the person who is trying to figure out what's going on with their income taxes.
Okay.
But that is a lot of labor, and
Yeah.
and it's not real warm and fuzzy trying to work this out. It's not like there's an ombudsman. It's not like you go down to Cincinnati. It's not like they look at your paperwork. You have to send it to California. Very difficult and cumbersome to work with.
Let me go back to a topic we were talking about before, which you espoused, that is eliminating the IRS, sending something in on a postcard. Would you get refunds then? Apparently not, huh?
Well, yeah. I mean, if it's
So ID theft could still work even under that system, right?
I'm assuming there's going to be some sort of mischief.
You haven't thought through all that.
I haven't thought through the postcard refund fraud issue, but there's a lot of guys out there that are willing to put in the time to try to get a little bit of something for nothing. I think that's clearly what's happening.
All right. We hear a lot about, from our presidential candidates and other candidates, how they are going to be job creators for small businesses. And in Ohio, recently, we have good news for the small business people, which is a small business deduction.
Small business deduction,
Which it's hard to know whether you've got it or not, or if you don't know about it. So why don't
Well, the
you
small
tell us
business
something
deduction
about it?
is another.
It's just in Ohio.
Just in Ohio.
Okay.
This has nothing, Mike, to do with the federal level. It's only in Ohio. Basically, small businesses and certain pass-throughs like limited liability companies and some things like that. Self-employed people, a lot of self-employed people in Ohio, they can take a deduction off their net, not the gross. They have to have a profit, but of their profit, the first.
Well, if the net, that's dollar for dollar then, right?
Yeah.
Yeah,
But
that's better.
That's even better.
Yep.
But you get down to net, and so if you have a net income, let's just say it's $100,000 in 2015, and say you have a car wash, or you have a garage, or a service station, or you're some sort of trade person, and you have you're self-employed, and you have a net income, and it's all Ohio money.
Or a law office.
Or a law office, right, or an accountant, or an architect, anybody who is working in Ohio, that person can take up to a 75% deduction of the first $250,000. So
Wow.
just simply, if you have 100,000 net, the 75,000, or pardon me, the 75% this year in calendar year 15 is $75,000. So you'd pay tax basically on $25,000. Very, very, very small business. So we hear a lot about small business. That definitely is a small business tax break that has saved a lot of small businesses many, many tax dollars.
Well, for all our viewers out there that are listening, what would qualify as small business and what wouldn't? Is
Well,
it
it would
the
be
number
any
of
business that would be-
employees or
No,
the
you can
amount
have
of
as
money?
many.
Or?
No, it's just a matter of the structure of your business.
Okay.
You could be self-employed. You could have an LLC. Those sort of entities.
Partnership.
And as long as you're Ohio and you're filing an Ohio income tax return and you're a small business, no problem.
Now, is that right there on the forms? I know Ohio's got like 4 pages of
Oh,
forms,
yeah, we have
and then when you go way back, it tells you where you can deduct
I believe the
things.
actual form number is IT-BUS.
There you go.
There you go. I believe that's the exact form number. I'll get it, show you exactly how to work it out. It's relatively simple,
Okay.
and the deduction is totally valid.
All right. We have a little bit of time left, and you were talking before about when they were trying to steal your identity, that you wouldn't necessarily send them cash, even though you told them to come over and get it.
I told them to come over.
Come
please.
over and get it.
Please, I want to see you.
Come right, sit right in the office.
I want
and
to see you.
give 'em- Okay. But they didn't want to do that. They wanted to use credit card numbers, plastic, things like that. And there is a groundswell in the Federal Reserve, is there not, that perhaps we're going to do away with paper money?
There was an article in the Wall Street Journal. My understanding, Mike, is that the Fed, not all the Fed, but some of the Fed members, well,
Janet Yellen's in charge right now, isn't she?
we used to have we used to have large bills. I remember seeing large bills. I think at one time, we even had a $100,000 Treasury bill. I never personally
Right.
was.
There's only 3 in
I never was personally
existence.
carrying many of those around,
Yeah.
but so they've been wiped out, and we have the 100, as you now know. My understanding is the Fed would like to get the 100 eliminated. What they have talking about is there would be no more new hundreds printed, and what would happen is they would slowly bleed out of the economy the hundreds that we have. They
like
think
the old steel pennies?
yeah, they think that they're bad for illegal activities. They don't like them, and I think what
Those
I
are the
think
Bennies, right? The Benjamins?
Benjamins.
Yeah.
I think what they want is, truthfully, I think they want to see electronic, commercial, non-currency money transactions. The Bitcoin.
Bitcoins.
Bitcoin. I
Okay.
think, if you want my opinion, we'll have Bitcoins. pretty soon, if not the exact Bitcoin,
Uh-huh.
we'll have the block and tackle technology is going to happen. I am totally 100% convinced.
So when you're paper boy at Christmas time, you usually give them, you used to give them $1, $5, $10. What are you going to give them now?
We're going to give them I actually have 2 Bitcoins, Mike, in my iWatch.
Uh-huh.
And my tech support guy is going to load up an app on my iPhone, and it'll have a little scanning device so that I can give the paper boy.
He'll put his device next to yours, and
There you go. And the thing that's interesting about it is these Bitcoins are encrypted.
okay.
So they're sort of like insured, they're guaranteed. All the Bitcoins are known. And so mine's there, people know I have got mine, they know you have yours. You can sell fractional pieces of the coin. And so, and the thing about it is it happens instantly. So like for example, in NASDAQ is very interested in this, and the New York Stock Exchange is very interested. Because as you know, if I sold IBM today, I don't get my money today.
Right.
I have to wait 3 days.
Right.
Well, as soon as we get things encrypted with this encoding block and tackle technology, it'll trade instantly. So we're not going to have to sit around and wait for 3 days when we do a sale of
For
IBM.
your closing.
We'll get our money put in our bank account then. And so a lot of people are interested in this. IBM has just launched a big program to get into this sort of concept. Now, whether the Bitcoin will follow along with the underlying technology, that's a different issue. We might have a different currency. It might be called something else. But we will.
Something generic.
The government wants currency out. There's just no doubt about it. And we're seeing obviously more credit card transactions, more direct deposit transactions. Everything is moving in this direction. And what I think they really want to see is the security wrapping. The security wrapping on the transactions, which the block and tackle technology has through the Bitcoin. So the Bitcoin could come along, it may not. But we'll have something, I think, of that sort of design because there's so much mischief with cash. And I think the governments would like to stop it.
No more 3-shell Montes anymore.
Let
me ask you this.
There'll be people trying to do something, I'm sure.
With them, yeah.
Yeah.
There's 350 million or so people in our country, and I'm just guessing that the level of sophistication in financial matters right now wouldn't extend to most of them. Maybe I'm selling everybody short. I don't know. Wait a minute.
There's a lot of people running around with iPhones.
I got a call here. We got a call. We're going to take it.
Good.
So let's find out. Good evening. You're on You and the Law.
Hi, how are you tonight?
I'm pretty good.
Good. This is my favorite episode of the series. I look forward to this every March.
Well, great.
I do have a question, and that is about writing off charitable contributions. Now, in the past, I've made contributions financially to different organizations and different causes, but I've also provided, skilled services at times to groups or organizations, and I'm wondering if I can assign a dollar amount to that and also deduct that from my taxes.
Okay.
That's a real good question, and thanks for your work in the charitable arena. That is very good. Obviously, all the cash and checks that you would write would be deductible. If you made donations of tangible personal property, food, supplies, furniture, cars, you can take a deduction if it's properly substantiated for that. Mileage, he gets a mileage deduction. Unfortunately, there is no deduction that's permitted for time that you would put in for the Red Cross, the church, any other 501c3 properly qualified charity. So your time is not going to be deductible. but your travel and things that you would donate to the charity, the fair market value of all those things would be deductible as itemized deductions. You're going to have enough of those to itemize to get you over the standard exemption amount. But that, very good question.
Does that answer your question?
Yeah, I guess a follow-up to that, you mentioned 501c3s. Is that a requirement for the deduction, or, if we had like a community event for someone who had medical issues, and we're donating directly to them, would that be deductible, or does that not count?
No, there's actually on the web, you can get a list of, if you will, IRS-approved bona fide 501c3 charities, and every now and then you might hear of a local fundraiser where there's somebody with a medical problem, somebody with a health problem, some tragedy that happens in the community, and people just start giving money to the family members. That's not going to work. You're not going to get a charitable deduction if all of a sudden I get in a car wreck this evening and people want to make donations because I have astronomical bills. No deduction. But if you would give that money to the Red Cross or the local church or the United Way or some other, if you will, properly structured charity, then they could take it and give it to me, and it would be totally permissible. So sometimes you need a third-party conduit to get the IRS charitable deduction.
And does that answer your follow-up?
Yes, it does. Thank you.
And thank you for calling. It's never too late to call you in the law. Thanks again.
Good night.
We've got a few minutes left. I don't want to get into a big topic, but
How about a little general planning?
a little, yes.
And it ties into
That's
the
what
Bar
right.
Association, if I may, Mike, interrupt?
Yes.
The Bar Wills to Heroes is an awesome program. They do wills for people. There's absolutely no reason why the bar shouldn't do that. It's a tremendous thing. But to just add a little icing to it, everybody in Ohio really should have four things, Mike. They should have a will, that's when you die, but the agency documents are extraordinarily valuable. A medical directive, a living will, and a financial power of attorney. So everybody in Ohio who's 18 and older and competent should have four things, because you could fall, you could get in a car wreck, you could end up in the hospital. And without the medical agency, the doctors might be a little uncomfortable on what to do with you. Your children could say one thing, the wife could say another. People don't really know what to do. So those agency documents are very, very, very powerful for the medical. And then Ohio has a standalone financial power of attorney, which if something would happen to you and I was your agent, I could pay your power bill, pay the mortgage, pay your real estate taxes, sign your tax return, and help you with financial matters until you're able to do those yourself.
A lot of questions that you get along those lines are, what's the difference, or how do they overlap a living will, a DNR, and a power of attorney for health care, and there's little nuances between them.
That's true. I mean, I can clearly tell you this. I mean, I may not have the time to peel into this, but if you want somebody to help you with your financial matters and avoid Ohio guardianship, the way to do it is a financial power of attorney, which will allow people to handle those economic transactions. Okay.
Those are 10-page documents now, aren't they?
They're 10 pages.
Or more.
But if you need to sell your house and you can't sign the deed, it's not going to go unless we have a guardianship and a land sale, which is very, very expensive.
Right.
If you're jammed up in the hospital and the doctors really don't know what to do with you, and maybe you would prefer to be in a certain hospital, or you prefer to be in a certain care facility,
Put it down.
or maybe you like to be up to the Cleveland Clinic. No one's going to know these things, or even have the ability really to do them without possibly court orders, if you don't have the medical directive and the living will. I know there's all sorts of people have different thoughts about end-of-life things, but it's really not practical, even hardly to get there,
Right.
unless you sign the documents. So
Right.
those things should be coupled together with the will, and then you have a nice package where you're covered, if you will, an umbrella of protection while you're alive,
Right.
and then you have something to handle your affairs when you're not alive.
Very quickly, living will, DNR, are they the same?
Well, you can incorporate those sentiments in the
Right.
living will. Yeah, so they can
Right.
be bundled together. That's
Right.
correct.
They're not separate things.
They can be together.
You know, lots of folks think they're separate.
They don't have to
and,
be separate. They can be in
whatever.
one
So,
instrument.
Hey, we're running out of show here. It's great to have you on.
Thanks,
you
Mike.
for all of the discussion that we've had, and I'll let you, the viewing audience, know that you've been watching You and the Law, produced here at the studios of DATV. I want to thank all the volunteers behind the scenes who have made this program possible, and again thank Chris Cowan for taking time out of his busy day to come. I'd like to say goodnight to Lily and Katie wherever they are. I've been your producer and host. I'm Mike Monta. Thank you for joining us on You and the Law. We'll see you next time. Good night.